Welcome to our channel. In this video, we'll dive into the lesson of accounting standards and conceptual frameworks, discover why they are crucial for financial reporting, and gain a clear understanding of their differences. Get ready to learn new concepts and explanations in just a few moments. Let's get started. Let's first answer the question, what are accounting standards and conceptual framework, and why are they necessary? Well, when we talk about accounting standards and the conceptual framework, we're discussing the blueprints that guide how businesses present their financial statements. These standards, issued by various bodies, aim for consistency. For instance, when it comes to presenting financial statements, without a set standard, every company might have a different approach. Take, for example, our basic accounting principles. We know that cash is always listed first as an account title because it's the most liquid asset, right? Following cash, we have other current assets, those that can be converted into cash within a year. And then, we have non-current assets, assets that can be used for more than a year. This arrangement is a result of having a standard. Without such standards, the accounts in the statement of financial position wouldn't be listed the way they are now. The current order, starting with cash, followed by other current assets, and then non-current assets, is due to the standard presentation. Having these standards brings uniformity, and with uniformity comes comparability. Comparing the financial statements of two companies following the same standard becomes meaningful. Now, let's distinguish between accounting standards and the conceptual framework. Accounting standards are specific. For instance, I.A.S. 41 by the I.A.S.B, which deals with recognizing, recording, measuring, and disclosing biological or agricultural assets. These are unique assets capable of growth and procreation and giving birth to offsprings. The standard provides specific guidelines for such assets. On the other hand, the conceptual framework is what you should refer to when the transactions or items you're dealing with as a company accountant aren't covered by a specific standard. What do I mean? As a company accountant, when you encounter a specific transaction or item for which there is no existing accounting standard or pronouncement, you turn to the conceptual framework. This framework guides you on the principles to use in order to determine the proper recording, measurement, recognition, and disclosure for that particular item or transaction. To draw a comparison, think of the relationship between the conceptual framework and accounting standards as similar to the Constitution and Republic Acts in law. The Constitution is the mother of all laws, and all other Republic Acts must align with it. If they don't, they are deemed unconstitutional and are not considered valid. However, there is a crucial difference when comparing this with the conceptual framework and accounting standards. While the Constitution is stronger than the Republic Acts, in accounting, the accounting standards hold more weight than the conceptual framework. The accounting standards are the primary source to follow. The conceptual framework serves as a secondary option, something you turn to when there isn't a specific standard addressing the transaction or item in question. So, if there's an accounting transaction and a standard has been written specifically for it, you must follow that standard. You only turn to the conceptual framework if the transaction or item you're dealing with as an accountant doesn't have an accounting standard addressing it yet. Okay, but remember always that the roles of both the accounting standards and the conceptual framework might be a little different, but their goals are similar, and that is ensuring reliable, comparable, and credible financial reporting. The two work together to provide a comprehensive guide for financial reporting. And that's it for this video. If you found it helpful, please give it a thumbs up and consider subscribing for more accounting tips and tricks. Don't forget to hit the notification bell so you never miss an update. Let's continue our learning journey together. See you in the next video.